Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are doing an update to the Las Vegas real estate market.
Yes.
This is our first one in a few weeks. We had the holidays, and we jetted off to Tahiti, almost completely not sunburned anymore.
There you go.
Okay, we're going to jump right in to this update. The market is absolutely starting to take off.
Yeah, I mean, look, we had low inventory before, but it's getting lower still.
Okay, let's do this. We'll go through the data we'll talk about as we go through it.
Okay.
So we're going to start off. We're going to jump over here and just hit the real-time market profile real quick. Now, remember, this is the weekly data. It just tracks everything. And we're going to start with per square foot, okay? Per square foot usually starts taking off in February.
Mm-hmm.
And it's a lagging indicator because it shows what houses went under contract like a month or two ago, right?
Right.
Okay. Juana, in the last 2 weeks, since December 22nd to today, the price per square foot of a single family home in Vegas went from $258 a square foot to $261.
That's a substantial growth in just a couple weeks.
What else is interesting is keep in mind that these houses going under contract are going under contract when interest rates were in the high sevens.
Mm-hmm.
And now we have houses, interest rates are in the high sixes.
Mm-hmm.
Well, we have anecdotal information on that to talk about too, don't we?
Right.
Because we just took a listing,
Mm-hmm.
and we'll talk about that in a second. Okay. That's a substantial increase. Like the level of increase, if you look at this per square foot, you can see it took like 3 months to go from 260 down to 258.
Mm-hmm.
If you look at that little line, I'm going to show you the big chart. You'll get a better idea. This thing is starting to take off, which is really surprising. The next one we're going to talk about that's important on here is inventory. December 1st, we had 2,600 homes just in Vegas. These are just single family homes that were available. We're down to 2,271. We've had 400 homes disappear, which is about 15% of the number of listings available in basically 5 weeks.
Right. So actually more homes than that were sold, obviously, right? Because we still had homes that came on the market and homes that sold. But the net effect is 400 homes less than a month ago.
Yeah, that's pretty substantial. Okay. Over here, you see that there's this market action index. It's 38. It's that down at the bottom. It's still a seller's market. It looks like it's chilling out. But when we zoom in on it and we go look at, this is like the weekly change, how it changes every week. And it's pretty volatile because it takes in all this data. So a little change can have a big effect. But it's 42.31, which means it's starting to trend up. Mm-hmm. Now, this happens every year. But if you look at last year this time, it was still below 40. Mm-hmm. So the market is getting hotter than it was last year. And we know last year in Vegas, home prices went up 6%.
Right.
And we did not predict 6% price appreciation in Vegas. Mm-mm. But it's looking pretty hot.
Right.
Oh, can you just kill that? Okay, sorry about that. People calling to list their house. So we'll get back to them in a second. You guys are more important right now doing this market action. Okay, this is, like I said, this sort of is a leading indicator for how hot this spring is going to be.
Right.
Okay. This is the price per square foot. This is the bird's eye view. This is really the last 5 years. This goes all the way back to January of 2019. Mm-hmm. You can see we have our normal market, and then we have the run up. And then we have that little bubble where interest rates started going up. And why did the impending rise of interest rates cause home prices to go up?
Well, so people were trying to catch the last of the lower interest rates. So they were at a point where they cared more about the interest rate than they cared about the purchase price. So we had a lot of people purchasing homes, and because there was a lot of fury and a lot of excitement about that.
Yeah.
We had a lot of multiple offers, which bid up home prices.
Then you can see that it moderated back to a reasonable level, which was still higher than the year before. You look at the dots every year, price per square foot has risen, and we're back in that nice trend. Well, what you don't notice, it's hard to see on here, the very end of this all the way to the right, that little circle, is actually substantially above that line. Like, this is the largest 2-week increase we've seen in price per square foot since May of 22, May of 22, and this is 2024. Okay, so that's pretty crazy there. Inventory, Juana. This historically, if you go all the way to the left on here, our inventory should be between 5,000 and 6,000 homes in Las Vegas. It's just Las Vegas. If you go to the whole MLS, you're going to be over 10 to 12, which is normal for a normal market. You could see that we don't have enough homes available.
Right.
Why is that? Why don't we have enough houses?
People aren't ready to sell. People have these amazing interest rates on their homes of 1, 2, 3 and change percent, and they want to hang on to them. So what they're looking for is, it's not that they don't want to move to a different home. They do, but they're looking for another home, and there just isn't enough inventory. So you're kind of a chicken and the egg situation, right? Sellers don't want to put their homes on the market. They want to keep them as an investment, but that means that there is insufficient inventory for them to purchase.
It is possible we could break the record of the low inventory of 21 and 22. What, in effect, would that do to home prices this spring if we get below those insanely low inventory numbers?
Right. So I've been talking about this for months at this point, that I'm expecting a really a tough spring for buyers. I'm expecting multiple offers. I'm expecting multiple people chasing single homes, and only one of you is going to get it, right? So there will be several home buyers that will be walking away empty-handed and disappointed.
What about the people that have put the articles out saying, it'll be easier on buyers if interest rates drop, because interest rates are projected to drop in the spring?
No, they won't. No, it won't, because it'll just bring out more buyers. So yes, it will be easier from the perspective of maybe getting some sellers off the fence to put their homes on the market, but it will also get a lot more buyers into the game. So for every one home that a seller is willing to sell, you're going to have multiple buyers interested in buying it.
No. Okay, this next slide, property with price decreases. We had somebody in the comments who basically said, hey, I've seen a lot of price reductions, and it's normal, first of all, to have 40 to 50% of homes have price reductions, minor ones. Most homes tend to sell within 2% of list price. Right now, we're selling homes about 99% of list price, so they're all selling pretty close. What's interesting is if you compare this year to last year, far fewer homes have had price decreases. So what does that say about the market now versus the market a year ago when it was over 50%? Because right now we're below 40%.
Right. So when we have less price decreases, that means that two things. One, that sellers are pricing homes more, closer to market value.
Okay.
And that buyers are seeing the value in these homes, and they're willing to pay for them. But one last thing that you're seeing is that, because depending on the price point, certainly anything under $750 is much more likely to be sold with financing. That also means that these appraisal values are probably coming in pretty close to that sale price, which is enabling buyers to move forward with the purchases.
Okay, here is another chart. This is market segments. Now what this is, you've seen this, we're looking at the bottom of the chart here. We have the 4 segments of the market. It's the top quarter, then the second quarter, the third quarter, and the bottom quarter of the market. So the middle of the bottom quarter is $379,000. So if you bought a house at $379,000, you're at 12.5% of the market. It means 87.5% of the homes are more expensive than that, which is actually pretty crazy, because $379,000 was the median home price 4 years ago. 4 years ago, that was the median home price. Now that's nowhere near the median. The reason I'm showing you this chart is 2 things we're going to look at here. First of all is those days on the market. You can see that the higher end, $1 million plus, is on the market about 84 days. And then as you drop down in price, they disappear quicker. So 56 days is relatively fast time on the market, right? The other thing is those 2 columns that say new and absorbed. So new means new list, how many new listings there have been in a given period of time, and then absorbed means how many were sold. They were taken off the market, right? Had to be sold to be absorbed. So we had 20 in the luxury end. We had 23 new, 48 absorbed. So for every home that came on the market, 2 sold. Okay. And then we had in the next higher price range, and then remember this price range is highly susceptible to interest rates. Why is that? Like 600, 700,000.
Right. So, generally speaking, anything under 750 usually sells with financing.
Why is that?
That's a great question. So the reason is because of where they are where the buyers are in their life cycle of purchasing. They tend to be at the front end, meaning this tends to be their first or second home that they've purchased, so they don't have sufficient funds to pay cash, or even if they do, they would rather have their cash work in other ways for them rather than purchasing a home. Once you get into the luxury market, now these people have a lot more cash available, and they may deploy some of that cash against purchasing a home outright, not having to deal with a mortgage for a variety of reasons.
Right. Okay. And then the next one, that third group, the 474, 54 new, but 90. So this 96 absorbed. This is also about 2-to-1. It's like almost for the one that came on the market, almost 2 disappeared. This is also it's fairly interest rate, but this is a lot of we're almost in the starter home, right? These are smaller homes. These are probably 2,000 square foot houses that are 3 bedrooms in pretty decent areas, right? That some people may be buying. These are the homes where people are saying, hey, I know my monthly payments could be $2,700 and I could rent this for $2,000, but they're making the decision to be homeowners, right?
Right.
That's okay. Now this last one here, 76 new, 100 absorbed. It's still relatively hot. That's more absorbed than new, and still a lot of cash investors in this price range, right?
Right, but these are the starter homes, and these people are very susceptible to interest rates because you see a lot of FHA purchasers in there, so very little down. So the amount of because they're putting less money down, their mortgage payment is going to be higher, particularly with a higher interest rate. So that's where people kind of are reaching to get into that first home.
So anecdotal information, took a new listing, right? Just took it. We used another property as a comp. It was priced better than ours. And we're like, oh, well, as long as this is on the market. And we literally just looked at this like 2 days ago. And then we looked again today. And what did we find out about the other property?
Has an accepted offer.
Has accepted offer. It's no longer a comp. We don't know what the accepted offer price is. But the bottom line is, it's sort of surprising. It was on that market how long, did you say?
I'm going to say
58?
Something like that.
Okay. And it's more in this 474 to 640 range, which you can see days on the market there are 60 to 70. So sold relatively quickly, a little faster than the general market. Wanda, what do you expect to see for days on the market? We'll look over here, 84, 70, 63, going into the spring as inventory falls. Shrinkage. Days on the market is substantially going to shrink.
Yep.
Price per square foot, what do you see it doing going into the spring?
Growing.
What about numbers of price reductions?
Shrinking.
Okay. What happens if we don't get inventory back and interest rates, Fed starts dropping rates and then mortgage rates start tanking pretty hard?
I think we will get inventory back because the more interest rates come down, the more inventory will come on the market. However, like I said, it's just going to bring more and more buyers to the marketplace as well, because just as sellers have been sitting on the sidelines, so have buyers. So I think you will continue to see the situation where you have more buyers than sellers. So I don't see this turning into a buyer's market. I see this continuing to be a seller's market.
Last question. A lot of people have been saying, hey, don't buy now. Wait, there'll be huge opportunities after the market crash. You'll be able to buy way cheaper after the market crash. What would you say to those people? Because they're all saying the same thing. You're incentivized to say that. Why would be incentivized to say that? We're trying to get listings. If we were trying to get listings, we'd be saying sell the home before the market crashes, list with us. We're not saying that.
Yeah, we are.
No, we're not saying that. What I'm saying is what do you say to people who are convinced, that are on the sidelines, that are saying, I'm going to wait. I've been waiting since 2019 for the housing market to crash, and I'm going to keep waiting.
Well, buy a house when you're ready and when it works for you.
Okay.
The idea that you're going to time to market is not in your favor. And the idea that the market will crash anytime soon, barring some crazy event, that's probably not in the cards either. we're looking at a pretty stable economy. We're looking at a real estate market that has actually not had a lot of transactions over the last couple of years. So there's a lot of pent up demand. We're looking at low inventory. We're looking at more buyers than sellers. So none of those things would indicate an impending market crash. That's not to say that home prices won't decrease. They very well could. It's just not in the cards for it to be in the immediate future.
We did a video 2 days ago where we talked about the psychological effect of how consumers are whether making a purchase or judging the economy. A lot of people who are making a single large purchase feel like if they buy at the wrong time and then prices drop, that they're somehow cheated out of something. And do you think that plays into these people who are hesitant to do anything in their life?
I don't know how much they feel cheated or how much they feel that they made a mistake. And people are very adverse to making mistakes. So rather than taking an action that could be the wrong action, they choose to not take an action. And what they don't realize that choosing to not take an action is a choice, and that can also be a mistake. So I think that's it's a more complicated issue than maybe most people realize. My sentiment is that people should buy homes or sell homes when it fits their particular circumstance and concern themselves considerably less with what the market's doing.
I'm going to put the slide back up, this price per square foot. Could you imagine, okay, so if you go back to where it says February 2021, it's right above that little thing that says 7-day average. That little dot is actually January of 21. Could you imagine asking somebody then, do you think it's a good time to buy? And them looking at just all the information they can see without being able to see the future, saying, oh, these homes are overpriced. Just wait for in the future for them to go down before you make that decision. And actually, January of 2021 in Vegas and probably every other city in the nation, home prices were the highest they had ever been, ever.
Okay, so real estate is a long game, guys.
Okay.
So whatever is going on in the market, that's great. But real estate is a long game. And trying to purchase real estate the way we purchase stocks on E-Trade or whatever trading platform you're using, where you can buy and sell multiple times in a short period of time, is not the way real estate works. So I appreciate the people who were trying to time the market, and I appreciate people who try to time the market still. That's not my sentiment. My sentiment is, like I said, buy and sell real estate when it fits your circumstance, and don't worry about the market, because if you do it according to your circumstance, chances are that in the long run, you're making the right decision for you, and that's what's going to put the most money in your pocket and provide you with the most benefit.
Yeah, I agree.
Okay?
Yep.
You got any more charts?
No, that was it.
Okay. Did you like Todd's charts? Leave us a comment and tell us how much you love his charts. And remember to leave us your real estate related comments. We appreciate them. Please like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.